Hi everybody, welcome. It's day two, trading the markets using Wyckoff VSA. I'm Gavin Holmes, I'm your presenter, and thank you very much for all the emails I received yesterday. I'm glad that you're learning something. Well, we're still not even halfway there yet, and there's still a lot more to be sharing with you. Now, Gary's asked a question here about which platforms to use for trading, whether you're trading Forex, futures, stocks, whatever. So let me tell you what I use, and then that'll clear it up. Okay, one of the first platform that I ever used to trade was the Infinity AT futures platform. Okay, now I did trade stocks as well, but I was trading on Tom's account. So with stocks, there's many places that you can go to trade stocks. And I'm not going to give you a preference on where you should go because every country is different. But with futures and Forex, which is what I mainly trade from an intraday perspective, my preferred platform for trading futures is the Infinity AT charting platform. Now, that's my personal preference. I can tell you, looking at the customer database, the actual largest number of people trading are with 3 different platforms. And those platforms are Infinity AT, NinjaTrader, and then TradeStation. Those 3 come up at the top for trading futures. Okay, I've got NinjaTrader and I've used NinjaTrader, but I do not trade on the NinjaTrader platform. Okay, so I can't vouch for the execution speed. With my Forex trading, there are 2 platforms that I use, MT4 and MT5. I'm mainly now using MT5, and I'm using a company that based out of Belize, and this company are called FX Choice. And I've had nothing but good reports about them from the people. We've got about 300 users, I think, that have signed up with them. And I'm using MT5 because that works incredibly well for TopBot for Forex, as I'm going to show you today. Now, before I get into the presentation, there is something I do want to share with you all, and it's a document that I believe is very useful for explaining exactly what cryptocurrencies are and how they're going to affect our future. And my job as an educator is not just to teach you how to read the charts, it's to keep you informed about what I believe is a changing world that we're in right now, and part of the change is going to be in the way we transact with each other in the future. Now, I am very fortunate to be very good friends with one of our customers who is the managing director of the Gibraltar Stock Exchange and an expert in cryptocurrencies, Nick Cowan. So I'm going to Gibraltar to spend time with Nick and open the fund and everything like that. But more importantly, we have a 2-day event that we're doing at the exchange. It's a 1-day event, is live at the exchange. The second is online. I know some of you in this room are coming to Gibraltar. You are able to come into the exchange building and actually see us trading. That's absolutely fine. We've got all of that set up, and I'll give you details about that later. But this particular document was produced by Morgan Stanley, and I have to say, information in here is incredible. I'm not going to read it. It's take me too long, and it'd be a waste of time. I'm going to send it to you tomorrow as part of the course. I suggest you read it. It's got everything you need to know about what is a blockchain, how the security of blockchains work, what is a cryptocurrency. There's now, I believe, over 1,500, and they're growing. And we at Trade Guider are launching our own crypto coin, which will help, or token as we call them, in October or November. Not sure of the exact date yet, but it's very important that you're aware of this change that's happening in the monetary system, because I think the big banks like Barclays and JP Morgan and the others were a bit behind with the coin and the token offerings, and now they've opened. It's actually widely publicized that Barclays, in fact several of the big banks, are actually opening their own desks for cryptocurrencies. So that's an interesting question. Do they trade on a Saturday in Gibraltar? No, they don't. And one of the things about the Saturday event is it's all about, and this is very important, the theory behind the live trading session, which is on I believe it's the Wednesday, the following Wednesday, which we're doing online. Okay, so the good question, when you come to the exchange on the Saturday, we're not physically trading on the Saturday, but on the Wednesday, we are going to be trading, and we're going to be doing it on, we've done that deliberately online because we've already got 88 sign-ups, I believe, from around the world for people to watch that. Now, the idea of coming in on the Saturday, of course, is you can see how the exchange is set up, and there's more time for the people in the exchange who are there, like myself and Nick, to share our time with you because we're not having to look at live charts. So a good question, Paul, but no, do the big banks trade over the weekend in Forex? Yes, they do. Absolutely, they do. So, but you'll never see that. And that's not necessarily public knowledge, but the big banks absolutely trade over the weekends. And that's why you get gaps in the Forex market on a Monday, because there has to have been trading over the weekend for that gap to have happened. It doesn't miraculously just appear. So you'll see that happen quite a lot. Now, the other thing, Dave says, can you say anything about the security of funds held in Belize? Well, I can only say that they're registered by their government, and I can only talk from my experience and what's on the internet. I can't give you any guarantees, unfortunately, because there isn't any. Some of the biggest companies in America, like if you look at Bernie Madoff and you've said, well, would you have guaranteed that he was not taking money from people? No one knew. So there's never such thing as a guarantee that, oh, this company are absolutely bulletproof and they won't rip you off. Unfortunately, that's the world we live in. But I can only go by what I call due diligence. And I do a lot of due diligence, being an ex-policeman. And all the companies that I've worked with, we've done due diligence on, including extensive internet checks, all of those type of things. All you can really do, looking at their balance sheet, and I can only say that the customers that are over and have opened accounts with Infinity or with FX Choice, very good reports back. And that's all I can really go on. I can't say for certain that these companies are 100%, bulletproof, because I don't know. Don't think any company now is, are they? Looking at the way the world has changed. But I can say this: when you go into anything, I advise you to do your own due diligence and be satisfied, and ring up the company concerned, whether it's Infinity or whether it's FX Choice. Give them a call and ask questions. Just ask the questions. Anything that you're uncertain of. And they will give you the answers, and then go and check them. Right, let's get straight to it. So I'll get you this document. It's a very good document. I think you'll find it to be very, very, very powerful from a knowledge perspective. So let's get into the meat on the bones here. So yesterday we talked a lot about the importance of volume. We talked about some trade setups. We talked about end of a rising market and bag holding. Today, I'm going to focus very much on two key areas of the trade guide and methodology. One is what we call the top bot strategy, which is what I'm using most of the time. Okay, and that is because now in the new version of Trade Guide of 4.7, we have programmed in my trading plan, which has got rules-based system in it, into 4.7. So the trading plan is already built into v4.7. And I'll show you. We talked yesterday about how to avoid trading with the herd. And today, we're going to talk exactly about that. How you think independently when you're trading. And then tomorrow, as the futures markets are closed, the Forex markets will be open. And because in Europe, there is no holiday. The bank holiday in Europe was last Monday. So there will be live charts to look at tomorrow, and we will be doing some of these actual setups that I'm showing you today. What is herd behavior? Okay, now I'm talking about some of the emails that have come into me. By the way, I'm using, there's several platforms that you can use to trade stocks, but I use TradeStation for the stock trading side of the business. But it's not me who's executing the trades on that. It's another member of the team, but it's TradeStation. So who are the herd? Well, the herd is the group of traders acting as a group would under certain circumstances. This group are usually uninformed. They're non-contrarian, and they will believe what they read, what the TV says, and what their brokers tell them. This group will easily get locked into the market, just as the market turns against them. They become reluctant to sell because they'd show an immediate loss. So they hope and pray that they were right and that they can exit their positions with no losses. Yesterday, I gave the example of herd behavior in what happened to me in the London terrorist attacks and how the group behave. And if there's one thing I need to teach you about trading in these markets, you have to be independent of thought and you have to be contrarian. And it took me a while to get my head around that. But fortunately, because Tom himself was an insider, he convinced me very early on that if I began to think like the herd, I would lose. Smart money have 4 states of activity. Number 1, trades are made which are large enough to actually change the direction or the trend of the market. These may be over several days or even longer, creating a phase for the next move. This also applies to intraday trading, and it's very obvious. Phase 2, periods occur when professional money is not actively trading. You get low volume. This is just as important as when they're actively trading. You have to ask yourself, why are they not active? Low activity on a price bar closing higher than the previous bar indicates potential weakness. Low activity on a down bar with strength in the background indicates potential strength. Phase 3, the accumulation and distribution of the underlying instrument. If professionals are buying, they're accumulating. Remember, they will also be selling just enough to bring any small rally back down for more buying. But at the end of the day, will have bought more than they sold. When market conditions appear right, professional selling stops and a bull move takes place. If they are selling, which is called distributing, they also have to buy to support prices on any reaction for even more selling on the next wave up. Phase 4, we're not really concerned with what is going on because the end result of all this activity, either true or false, has been condensed down into a view, which we can see within the price, the spread, or the range, and the volume. A view also taken by the market makers, specialists, and professional traders who can see both sides of the market. And because they're trading their own accounts as well, will show you a true picture of the real supply and demand situation. So, what is a VSA sequence? This started for me, this particular sequence that I discovered while I was sitting with Tom back in 2009. I remember it very well. And as he was teaching me about these high volume bars, followed by low volume bars at the same price level, and then a clear change in behavior. So a bit like this. Here's the volume down here. So you have your high volume bar, it goes up like this, closes in the middle. And then in the future, maybe 4 or 5 bars, it goes back up into the area on very low volume at the same level, and then it collapses. So I said to Tom, I'm not, this is why we're obviously looking at improving the software. And I said, Tom, you've got different numbers for different indicators. I said, but I noticed that end of a rising market has got 7 or 8 different numbers. Surely it's the same thing. Why don't you just have one end of a rising market? Why do you have 7? And with no demand, why do you have like 15 no demand numbers? Why don't you just have one? And he said, this is exactly what he said. He said, Gav, he said, VSA indicators are like looking at a tree. And I said, what? He said, yeah, go and look at an oak tree. And he said, he had one in his garden. He said, go and look at the tree. He said, now you'll see the tree looks like an oak tree, doesn't it? I said, well, yes. And I said, oak tree, if you put 2 oak trees together, they look like an oak tree. I said, well, that's true, they do. He said, now if you look at the leaves, they look pretty similar, don't they, in shape? And I said, well, they do. He said, now take 2 of those leaves and put them under a microscope and you'll notice they're ever so slightly different, every single leaf. And he said, you go and check that. He said, now with the VSA indicators, the coding of those indicators is extremely subtle and based on my studies over many years. So he said, whilst we only have one bag holding signal for a specific reason, we do have several end of a rising market signals because the code for each indicator is ever so slightly different from the different numbers. So 71 end of a rising market, is slightly different from SOW5, end of a rising market. He said, but it does the same thing, it has the same effect. But it's very important you realise that of the nearly 300 indicators in the software, each of those indicators is looking for either ultra high volume or very, very low volume. So I said to him, okay, so what you're telling me is when distribution, let's talk about shorting opportunities, happen, you're telling me it always starts when the market gets marked up artificially on ultra high volume. He said 90% of the time that is correct. And I went, 90%. He said there's always going to be a caveat, Gav. He said sometimes you will see the market going up and up and up into an area of resistance and the volume getting lower and lower and lower. Not high volume, but low volume, as the professional money withdraw their interest in higher prices. So the volume dries up. So you can actually get a signal called no demand at market top. It happens. And I've seen them. So what I had to get my head around when I was learning this is I can't have, a human being wants to have, it's absolutely definite that every time you get ultra high volume on an up bar, that has to be selling, because there are occasions where that's actually buying coming in on that bar. We call it absorption volume, and I talked about it yesterday. It's very rare. They're not common. But you have to get your brain around the idea that with trading and investing, you have to use your brain to analyze these indicators in the right place. And this is where a sequence came in. Because what I pointed out to Tom was, I said, well, you've given these signals numbers. Why did you give them numbers? He said, because of the source code. The code is specific to each number, Gav. I said, right. I said, so surely if we saw a buying climax, sign of weakness 1, followed a few bars later by sign of weakness 10, an upthrust, and then the market begins to fall and we have sign of weakness 199 or 198, no demand, surely that's a trade setup. And he looked at me, he went, you're onto something, Gav. Do you think that could be programmed? And in came Grigory, the genius. And I told this on a webinar. And Grigory rang me the next day. He said, well, I've already done some of those sequences for you, Gavin. You're going to be amazed. And that's where Smart Center Pro started to be born. So a VSA sequential trade setup starts when ultra high volume is observed on the chart. Now that, for me, is absolutely vital to the probability of the move either up or down. When ultra high volume appears, it is a footprint. And it's the activity of smart money. When the smart money are actively buying or selling, then you see this massive volume price bar in multiple time frames, and it is in multiple time frames. It always begins in the smallest time frame that you're monitoring. In my case, sometimes a 1 minute chart. But if you start to go out to bigger time frames as the market's being distributed or accumulated, you start to see the clear picture. And the key to it, to making the successful trades, is the timing, which we're going to talk about tomorrow. When you observe this happening, it's not the time to take the trade. So when you see the ultra high volume, it's not the time to take the trade. And that's where a lot of people, I think, when they read or they read Tom's original work, thought, right, there it is, ultra high volume, it's an up bar, it's a red signal, I'm going to go short straight away. And then they get stopped out because there's an upthrust. So I'll repeat this. When you observe this happening, it's not the time to take the trade. It's time to get ready for the confirmation to take the trade. Remember the 2 golden rules of volume spread analysis. Weakness in a market appears on an up bar. Remember what that is. That is a price bar that has closed higher than the close of the previous bar. Strength in a market appears on a down bar. That is a price bar that has closed lower than the close of the previous price bar. A VSA sequential trade setup needs confirmation at the same price level where the ultra high volume appeared. We now need to observe low volume at the same price level in the future, showing us lack of activity amongst the smart money because they've already done their job in the background. And they've already been buying on that or selling. Remember, buying happens on down bars and selling happens on up bars. If they're buying into the market, and I'll give you an example of this in a minute, we're going to start looking for testing of that level. If they're selling the market, we look for no demand. And it's this point I want to talk about, this point here, buying. Now, I was doing my analysis today, ready for this week's trading, and I came across crude oil, and I want you to tell me, what do you all notice about the volume here on this down bar? What do you notice? And Nick's saying, hello, Nick. If people are trying to open an overseas account to avoid ESMA, I believe active trades will allow you to open an account in their Bermuda office. And I've also been told that some Australian brokers will allow UK traders to open accounts. Yeah, okay, thanks, Nick. That is correct. You can open with another country. You can avoid the ESMA rules, which I think are completely ridiculous anyway, but there we go. So we've got here Yao Ming, right? Massive volume. But this was at the end of the session. Now we can see that we're in between two lots of very strong trend clusters. But notice the strongest cluster was right, and when this signal appeared, was right underneath it. It came to the tick. And here we have one of our top bot signals. Sign of strength 129, climactic action, potential climactic action. A down bar with high to ultra high volume must contain buying from the professionals, especially if it's into fresh, low ground and the next bar is up. Now, this is interesting in this indicator because the next bar didn't confirm it, right? Very interesting, which is why I want to use the example because it stayed light green instead of solid green. But I want to talk about this indicator that happened literally 3 or 4 bars after this indicator had appeared. Now, when I say that these high volume bars imprint on the small time frames, if we go to the 1 minute time frame, this is where it all started. And these were confirmed. Okay, here, reversal, and a test. 2 minute chart, same thing. Okay, so you see how this builds up, another reversal. 3 minute chart, it's all here. Okay, here, here. 4 minute chart, it's all here. 5 minute chart, it's all there. Notice you'd have picked it up on the 1 minute, and then you've got to look for the change in behavior on the bigger time frames. Now, because the support level was very strong at 69.64, this market bounced straight off the cluster. Okay, so these are 1, 2, 3, 4, 5 minute charts, John, that I'm showing you. These are just small time frames at the moment. So if you go to the 15 minute chart, there wasn't an indicator, but look at the volume that came in at the end of the day, right at the previous support line. And again, what did we have underneath us? The cluster. And that cluster, when that bar closed, that cluster was right underneath it. So basically, it's proving that the support and resistance lines that are generated by the clusters are incredibly powerful, because they work. And if you can identify them in the small time frames when they start to come in, you can scalp trade it or you can even swing trade it. That crude oil chart moved up over a period of 2 hours, and it kept building higher and higher before it eventually ran out of energy because the market closed. But it's going to be a very interesting chart to look at over the coming days. So we see here a VSA sequential trade setup needs confirmation. We want to look for low volume where the high volume level was, and we can see that very clearly on this chart. We've got the high volume coming in. Notice the market comes back down into the area of high volume, and we have a confirmed VSA signal. This is Central Standard Time. That's correct, John. Yes. And we can see here a test. Notice the volume has disappeared. The market's still open, but as they bring the market down, the buyers who took control here tested it and it rallied. Now, had the market still be open now, where would I be thinking of going long? Above the top of that bar on the first test. We haven't had one, but if it starts to change color and move higher and these clusters disappear, which they probably will do, then it's a very good long trade. So if buying into the market, we're looking for tests. If selling the market, we look for no demand. Look for a change in behavior in price action. We talked about that yesterday. That's basically where the market turns. And these change of behaviors are consistently happening where the trend clusters are getting hit because of the support and resistance lines that the software is projecting out. We use, and I'm going to add to this now, the software to use the diamond dot short-term trending system, medium-term trending system, and the thermometer. And I'm going to add to this now. We're going to be, and I've adjusted my trading plan accordingly. We're looking for very serious support and resistance levels at climactic volume areas. VSA sequences often appear, go back for a second, bear with me. So VSA sequences often appear in multiple time frames, which they do. As you just saw in crude oil, you get the buying starts to come in on the 1 minute, then it appears on the 2 minute, then it's on the 3 minute, then it's on the 4 minute, then it's on the 5 minute, and so on. Because it has to start on the smallest time frame first and build up. Choose the time frame that suits your style of trading. For instance, a swing trader who holds positions for hours or even days often use 15-minute charts as their smallest time frame and weekly as the highest. See Gavin Holmes' trading plan for time frames. We're going to go through that with the additions in part 2. So I'm going to show you some examples now of sequences, okay, using multiple time frames and trend alignment. Okay, the entry was identified on a very small time frame. In this instance, it was a 1 minute chart that I'm going to show you. The trade, this is an actual trade that I took, netted 47 ticks of profit, and the trade lasted just over 90 minutes, which is not uncommon. The 6B futures contract is $6.25 per tick. So I don't know if you realise what the different size of contracts is with the CME, but there is a booklet available which you can get from the CME website. You can download it. I believe it's cmegroup.com, which has got all the information on futures and the different tick sizes. So in this instance, I was using Super Scout, but what I'm going to show you today in more detail is a strategy that allows me to get more of the move by not relying on trend alignment, but just picking where there's turning points. And with, trend clusters at climactic volume areas, you do actually get market bouncing off these areas. So let's start with strength coming into the market. Bill, they are, yes. And I'll give you a copy of that book when we send out the slides and everything tomorrow. You will all get a copy of my second book. There's no charge for that. You'll get a PDF and you can print it, and it shows you what those sequences actually are. So you'll get that. So don't go and buy it from our site. You'll get a copy. Now notice here, okay, where the arrows are pointing on the slide, that this is a strong price bar. Okay, it's a strong price bar because we've got very high volume. We've closed in the middle, but notice the market doesn't just bounce off it. It comes down into that area in the future. The volume's much lower, and we have what we call a test. And this is very, very common in VSA. In fact, Tom used to always tell me, when you see these bars, I'd be upstairs, and he'd say, Gav, we've got shakeout, or we've got climactic volume on the pound. You better get down here quickly. Now, he would be looking at, say, a 5-minute time frame. In this instance, it's a 15-minute. But then I'd sit down ready to trade. He said, wait, they haven't tested it yet. I said, well, there's buying there. Let's just go long. He said, wait. They need to test that level maybe once or twice before they're going to take the price up. And that, for me, was the key. I had to wait. And you're paid to be patient in this business. So I had to wait for that market to test. And sometimes sometimes after bag holding, especially, you don't even see a test. It just goes up. And that's going to come down to, the nice thing about the bag holding signals is you can use a very tight stop, i.e. 3 or 4 ticks below the bag holding signal if you want to be aggressive. Always remember, with a bag holding signal, the next bar should close higher than the close of the bag holding signal. I'll repeat, very important. the next bar should, when you see bag holding on any time frame, you want the next bar to close up higher than the close of the bag holding bar, because that's confirming the buying's there. In this instance, we see a signal 122. Now, this signal is part of the top bot strategy, and I'm going to share with you today some of the new indicators that I've added in 4.7, which you can highlight using the scanners if you want to get the email alert for them, or as I do, I'm using Smart Center Pro, so I'm getting the alerts both audibly as well the second they come through. I use a police siren, wonder why, for my audible alert. So anytime one of these high probability setups appears, as you'll hear probably tomorrow, you'll hear the actual siren going off, telling me that an alert has been sent A, to my email account, and B, it's on my Smart Center Pro software. So here, sign of strength 122 is potential professional buying. And it says a down bar with ultra high volume must contain buying from the professionals, especially if it's into fresh low ground and the following bar is up. Well, in this instance, it's a down bar. Okay, when it said fresh low ground, what Tom meant by that was there any price action within 25 bars behind it? And there's not. So it's into fresh low ground. It closed in the middle. The next bar closed up, which is higher than the close of this bar. And that must contain buying from the professional side of the market. So sign of strength 122 is a warning that buyers are stepping in at this price level. Now, last week, on about 18 different occasions, when that signal appeared in various markets, the trend clusters were purple and were right below it. Now, let me just tell you again, with the trend clusters, what is the strongest and what is what I call neutral cluster, but still important. So the three colors are purple, orange, and gray. The strongest cluster, which means there's multiple trend lines intersecting at the level, is purple. The second strongest, still to be considered strong, is the orange cluster. And the third one, which is still to be observed, but not as strong and can be broken, is the grey clusters. Here, after the professional buying has come in, we notice that the volume as the market falls into the area of buying, look at what's happening to the volume. It's drying up. So what I said to you earlier on is when you see very high volume at a price level, and then the volume goes back down to that level in the case of buying, and the volume is incredibly low, then you know something's happening. Because what they're telling us here is, hey, we bought here on this 15-minute chart, and now we're coming down. The market maker's bringing the price down, but the professional money, they're not interested because they've taken their positions. Okay, but you'll very often see the market rally, hit supply, and come straight back down into the area. Happens all the time. So you've got to be nimble. You've got to be able, and this is where with the top bot strategy, we can pick out where the turning points are. Okay, whereas super scalper and sharpshooter are very much in what I call in trend trading strategies, which I use all the time. I still use them, but I'm going to focus in today on top bot simply because I've done training courses on super scalper. I've done training courses on sharpshooter, but we've never done a training course on top bot yet. Supposed to do it in August, but my schedule was just too busy. So I'm going to dedicate some of today to show you why the top bot strategy, and in the new software, you can chop and change now. You don't have to have one strategy. You can have the other strategy. You can use super scalper in one instance. You can use sharpshooter. You can use top bot. All of them, remember, the top bot, the difference, Bill, between top bot and the other two strategies for trading, right? So we've got 4 strategies. We've got Prism, which is used for trading stocks. We've got super scalper and sharpshooter, which is very good for trading futures and forex, but we've got a lot of traders trading intraday stocks using these systems. Top bot was the very last strategy that we developed, and it wasn't actually my idea, and I'll come to that in a minute. But the difference, the big difference between the top bot strategy and the other two is that top bot is looking for market turning points against the trend. Now, when I explain to you what Grigory has done with 4.7, he's taken the trading plan that I developed in TopBot, which says, do not take the trade at the top of the trend, wait for the market if it's going up to make two lower lows on the price bar. So you've seen what we call the change in behavior. Or if the market's hit bag holding, to make two higher lows on the price bars as the market bounces off and goes up. Grigory's now programmed that in as part of the strategy. And I'll get Grigory to come in possibly Thursday to talk you through that. It's incredible how he's done it. I mean, I'm gobsmacked. It's basically taking a trading plan and putting it into a strategy so that you really don't have to do a lot of analysis. The computer's doing it all for you. So here we can see the 6B chart. This is now the 1 minute chart. Okay, and you can see very clearly here that we've got a widespread down bar, we've got a reversal and an immediate test, and it went up about 8 or 9 ticks. Now I know it came back down into the area, but look at the volume, and this is very key to it. So very often when you see this high volume, there will be what we call supply present in that volume, meaning there must be some sellers as well as buyers. So basically what has to happen for the market to rally strongly, they'll have to come and retest this level. And you'll see this all the time. So what I say, and it's quite a clear thing, is with TopBot, one of the most important signals that you can find is, of course, the end of a rising market to go short and bag holding if we want to go long. And the good thing about the markets today is you're going to get, and I counted last week, there was 27 on all, and now I'm monitoring, let me be clear, I'm monitoring 100 stocks, I'm monitoring every single futures contract on my other computer here, and I'm monitoring every single Forex pair. I'm also monitoring gold, silver, palladium, Bitcoin, Litecoin, you name it. So I've got a lot of things that I'm looking at, but please don't get me wrong, I'm not trading every single one of those things. I'm cherry picking what I believe to be the best indicators and the best setups. The chart that I put up on YouTube of me trading the euro, I would consider that a very high probability trade. And those are the ones I'm looking for during the week. One of the emails that came in yesterday from Steve, and Steve, nice to see you here. Thank you for your kind words. I appreciate that. How many trades a week on average do I take in all of these different markets? Now, that's a really difficult question to answer because some days I don't trade at all because I've got other things that I do, and other days I'm trading a week. But if I took the last 4 weeks as an average, which I did because I have been trading during August because it's been quite lucrative, I took last week 39 trades. So that was just during that period, but I had one day where I didn't trade at all. And the week before that, I took 48. So that gives you an idea of the number. Now, how many alerts did I get? Well, I counted that up, and I was staggered actually once I counted them. Let me just show you. I just put the thing up here. Great question, by the way. No one's ever asked me that, and when I went and studied it, because I do look at my trades, but I don't always count the number. But it was interesting, once I started to count the numbers, I don't think I've ever yet got above 50 trades a week, but all right, let's just put this up here for you. You should be able to see my screen in a second, and it'll be, this is my alert screen here. Just tell me when you can see it on the other computer here. Right. Okay. Oh, I'm just logging in, just bear with me. Right. Can you just let me know if you can see the screen? Put the inbox up here. Okay, good. Yep, okay, you can all see it. Good. So this is basically, I'm just about to delete all of last week's, this is from the last week of trading. And you can see, and a lot of the, because I also use another computer for this, but you can see how many alerts came in during a 5-day period. By the way, keep in mind, I leave this on overnight as well. So some of the emails, I mean, I've read most of them but on this computer, I've not opened all of them, but you'll see the number, 1,568 alerts. Now, when you get an alert coming in, it'll be based on initially this high volume, but then now with the new software, the alert comes in once the trigger number, which in this case would be up here, is broken and tested, and we've made 2 lower highs on the bar. So I'll give you an example. So here is the trigger, right? The software invisibly projects this out. As the market makes, and it breaks through it, it's got to make 2 higher lows, like so, on the bar, away from this area. And then as soon as it's done that, the software says, show me a test. And as soon as it gets a low volume test that is successful, it sends an alert. Tells you. Gary says, do you find you get impatient waiting for the 3 green or red diamonds to appear before taking the trade with TopBot? And does the new software reduce the time waiting? No, the new software does not reduce the time waiting because it's telling you when to get in. And the good thing about, sometimes it's very quick. With 4.7, I've had trades that have happened within literally 5 or 10 minutes of the first ultra high volume bar happening. It's come in real quickly. Other times I've had to wait an hour, 2 hours sometimes. I mean, this example that you've got here, you can see the high volume came in, but the market kept coming down before it bounced off. So it doesn't reduce the time, and you shouldn't want to reduce the time, because the idea of a trade setup is it's there or it's not there. And if you're impatient and the trade's not there and you take a trade, then you're going to get your backside handed to you on a plate for certain. So unfortunately, you do have to still be patient. Now, the good thing about the TopBot strategy is that I'm monitoring multiple time frames in multiple charts. So I'm not short of trades. I'm just being very selective, as you'll see, about which trades I actually take. So you can see when ultra high volume comes in, it most often comes, this is in Central Standard Time, by the way, because my computer is set for Chicago time in the trading platform I use. You very often find that the big moves or the accumulation or distribution in these instruments will happen around 7:30 a.m. Chicago time, which is 1:30 UK time. And that's no accident that my big trades happen between sort of 2 p.m. and 4:30 to 5 p.m. UK time. So in answer to some of the questions that came in on the email, one of them was, is it possible to make a living trading 1 day a week? And the answer would be yes. If you pick the right day and you do it after a news-driven event. So you go to Bloomberg calendar, you look at where news comes out and you trade the day after the news, not the hour after the news, the day after the news. And it's got to be big news. It's got to be something like crude oil inventories if you're trading crude. It's got to be the FOMC meeting minutes, very, very important. Unemployment numbers, all of those things. So the unemployment figures usually come out on a Thursday or a Friday sometimes, and they're different types of numbers. You've got to be familiar with what the news is coming out. I'm not saying you should pay any attention to the news. You don't. You probably want to do the opposite of what it infers. But you do need to be aware of when these big moves happen. So here we can see that we have what we call the trigger number. And what is a trigger number? Let's cover it. It's the top, the bottom, and the closing price of an ultra high volume bar. And you can physically draw them on yourself, or you can let the software do it for you, which it does, as I'll show you in part 2. Okay, so right, Raymond's asking, if a setup appears on a daily time frame, would you still go and look at a smaller time frame? Yes, absolutely yes. Otherwise, I'd be waiting for 4 or 5 days to get a trade. you don't want to wait that long. The market's constantly moving. It's fractal. If you see a really good setup on a daily or weekly chart and it's a bag holding or end of a rising market, you want to be looking at the small time frames because they're going to roll first. If it's end of a rising market, they're going to come down first. And you can make some very nice money shorting the market. If you've got bag holding on a daily chart, and it happens, or even a weekly, which is even better, then you're going to make some money. Happened with British Petroleum, the example I gave you yesterday. Yeah, it was a BP daily chart bag holding. Did I go and buy instantly? No. I waited and I looked at the 4 hour, the hour, and the 15-minute chart. And after 5 days, the market began to rally, and we brought the stock. So you've got to be patient, but it will. If you see it on a daily or a weekly chart, you're going to get a bigger move. Raymond, to answer your question. So the trigger number is quite important. Now, what happens, and this is very, very common, is the market is got what we call it churning. And Tom, and in fact Nick at Gibraltar, told me very often that when they were going to accumulate a position in anything, they would keep bringing the price back down to where they'd first accumulated to check to see if there's any more sellers at that level. And if there wasn't, they'd take the market up. And this example here, it's only a small time frame. It's the British pound, the 6B. You can see the churning very, very clearly. And a lot of traders get caught in the churning area, okay? Which is why, if you look at the trading plan that I'm going to give you, it says after the buying has come in, we need to make 2 higher lows on the bar and break away from this area to take the trade. This system, this strategy, will keep you out of trouble. It'll keep you out of churning if, again, it comes down to if you follow the rules. It's down to you. A lot of traders I've taught come back to me a week or 2 later and say, "You know something, Gavin, I broke the rule. Why did I do that?" And that's human nature. There's nothing wrong with that. Humans don't like being kept to rules. But in trading, if you keep to these rules, they're proven. They're a tried and tested mechanism. And we've got, I was looking at how many people are trading our strategies right now, and it's thousands. And some of them have been, had the software for 2, 3, 4 years. I'm talking about the strategies since 2016. When we launched Smart Center Pro, I can see how many traders are following. You can see clearly on the server how many people are logging in each day and trading. So it must work for them. So when we see this is what happens, right? Suddenly they'll make 2 higher lows on the bar, and then the breakout happens, and then you'll see testing of these 2, as you can see here. There's the first one. There's one there, there's one there, there's one there. Okay, and then they test it and boom, off it's gone to the races. Here is the buying, here is the breakout. Hello, Brandon. Does churning always reflect testing? Yes, always. Churning the market will result in multiple tests. In fact, you can see it right here. Almost all of these indicators are no supply tests. Now, when you know, like in the euro, the market is weak, you get testing that fails. And so part of TopBot, I've added in 2 or 3 types of tests. Test in a rising market, test of breakout, and failed test, which is a sign of weakness. I'm going to show you all this in part 2, so don't worry, we'll get to that once we go through the trading plan. Okay, so here, if you look at where the higher lows begin to happen, so we break out here, okay, we come back into the area for more buying, and then over here, we make our first and our second higher low away from the trigger bar. We then make a third one over here. And then I can tell you, because I traded this, we made 4, 5, 6, 7, 8. It kept going up. Okay, that's a 1-minute chart. Okay. Now, you can see here, the other thing that we have at Trade Guider is what we call the short-term and the medium-term trending systems. Now, they are measuring bullish and bearish volume. And they colour themselves green or red. And they're very easy to see. So when a market is ready to break out, before it does, you will start to see everything beginning to turn green, like here and here in this example. But the thing you want to be looking for when that happens is look at the volume. Because what happens is, as the market retraces, as we can see here, and comes down, what do you all notice about the volume as the market pulls back into the trigger bar? What do you all notice about the volume as it pulls back into the trigger? Just tell me, what do you see there? What do you notice as we start to get ready for the breakout? What's happening to the volume on the pullbacks? This is really important, this. I'm going to really stress this. So important. This is what I look for all the time. This is what Tom said to me. He said, Gav, if it's going to break out, when the pullback happens into the trigger bar, what do you notice? It's going nowhere. There's no selling pressure. There is no selling pressure. That's what that's telling you. And if you can recognize this as it's happening, you're going to make money. This happens all the time. There's no selling pressure. Remember that. And if there's no selling pressure after a bout of buying in the background, the chances of that market breaking out are incredibly high. I'd say above 80%. Okay. Now, if we see weakness appearing and the market fails to respond to the weakness, it means the market's strong. Now, that always got me when Tom said, right, Gav, we've got a sign of weakness appearing. I said, right, shall I go short? He said, well, no, hold on a minute. Wait. I said, well, why? There's weakness there, Tom. It's definitely a weak bar. He said, well, hold on, Gav. They might test it. I said, well, what do you mean? He said, well, if there's a weak bar and the market comes down into the weakness and tests it, or you get stopping volume and everything is still green, it's telling you that the market's strong. And I couldn't get my head around that. I said, so not every single ultra high volume bar then, Tom, is a sign of weakness. And he said, no. 90% are, Gav. He said, but 10%, you're going to find the market retracing into the weakness and actually more buying happening. And that means professional money have ignored that weakness and want to take it up higher. And if you get your head around that, you'll understand it happens all the time. So you mustn't, and I don't anymore, just see an ultra high volume bar and say, well, that's a short immediately. It's not. You have to change behavior. And the traders that are going to lose money are the ones who are too impatient and will not wait, because they believe wrongly that by being in the market, they're participating and they're going to make money. You probably won't. I found, and it definitely worked for me, that being patient worked. And then when I got the setup, and now I don't even have to look for them. The software tells me they're there. So I don't even have to worry about being impatient anymore, because if it's a setup, I get the email. I get the alert. And then all I've got to do as a trader is go to the chart, use my skills, look at where the stop is going to be placed and go. Now, certain setups have a much higher probability than others. I know that. We'll talk about that tomorrow. The probability is certain setups that have a very high probability of working in your favor, but they're not guaranteed. And I will stress this. There is no guarantees in trading. You are dealing with risk. And if you want to understand that, so you've got a really good grounding, there's a great book. I've got it right in front of me here on my bookshelf of many books. It's a worldwide bestseller by Peter Bernstein, and it's called Against the Gods, The Remarkable Story of Risk. Big book. How many pages is this? Let's have a look. 300 pages of information. So you basically got 337 pages. So if you don't understand what risk is, then you better read that book, because I'm not going to tell you about it. It's a very, very good book. And so here we have the climactic action coming in at the trigger number. This is very common. They sell a bit and buy it back. That's how you accumulate a position. You sell just enough, hence you get a red signal, and then buy it back, which is why the indicators are not wrong. That is supply coming in, and there's some buying. Climactic action is exactly what we saw in crude oil. So to give you some examples of some sequences, Okay, and this is an example now of selling. So I've shown you a buying sequence. This is now selling, and it's again 6B. So we know that weakness will appear on up bars, and I've marked the very top of the very high volume bar. Remember, when you see ultra high volume on up bars, it could be, and most likely is, professionals taking profit because they brought lower. All right, now in this instance, we can see that the market is marked up on 3 separate occasions, and there are 2 separate indicators. And if you mark the top of the bar, you can actually read each price bar by bar, and you can tell if it's weak or strong. This bar here has got, you can see here the volume's very low and it closes in the middle. It's almost like a test, but the next bar closes lower, so that has to confirm there's weakness. The next bar here also closes lower, and the next bar closes level. And you can see down here the volume is increasing, but the close is near the low of the bar. So what does that tell you? The effort to push price through this was there. The result was a lower close. Then they bring the price back down, and we get a little bit of buying coming in. Then there's more weakness. And then these bars here are the clue that this thing's going to go. We get a black bar in Trade Guide is designated as a level closing bar. And you can see here that this bar here closes level. And if we come down and have a look at the volume down here, it's quite high, but it closes near the low, and the next bar collapses. And that is weakness. And that is what causes this market to fall. We now have, as you can see, after the sign of weakness at the trigger, we make 2 lower lows. And what's our best entry? It's going to be a no demand bar or supply coming in. And in fact, we get a very low volume up bar, no demand. The market's changed behavior. We've made 2 lower highs. We've got weakness in the background, and the market is fallen. And there's your entry. This is specific. And I do this all the time. You'll see me do this all the time. And in fact, in the euro on Friday, we were seeing no demand on the 1 minute. We were seeing up thrusts on the 3 minute. And the trigger had been broken. So I knew the market was weak. As I say, one of the best trading week last week for a long time. And I think there's more to come. I didn't honestly expect that at the end of August. Usually it's been very quiet. So this is no demand after change in behavior with weakness in the background. I'll repeat that. This is no demand, which is low volume, as you can see from the arrows. The market's tried to go up into the area of weakness, but notice that the trending system, the volume thermometer, and everything is negative. Is there any questions so far? Any questions? So see a couple of people typing in. Okay, SC, where are the entry points on this chart? There's only one. There is only one entry on this chart. I'm pointing at it right now. There's one entry. That's it. I actually took this trade years. I remember it very well. Because I take photos of screenshots of all my trades. The only place you could take a trade was there. You couldn't take it here. You couldn't take it here. You couldn't take it there. It's there. That's it. There aren't various entry points. There's one. This is called a trade setup. Thank you, Steve. You said this is incredibly clear. Good. That's what I'm trying to do. Make it absolutely clear. That's the entry right there. No demand. The market's going up. The volume's declining. And this is in the background. And you're into the trigger bar. If you were to draw a line out here, right? If you wanted to draw a line from the top of this bar and project it all the way out, you come up almost to the area here, to the trigger number, and down you go. I can't be more clear than that. What happens? There's the go demand, and then you get the gotcha bar. All right, and that line I'm projected out is projected out by Trade Guider, the software. All right, John, that's a good question. So weakness or strength begins to build on lower time frames first. When do your weekly daily analysis, do you start with the higher time frames and mark them up, or start with lower time frames? You start with the highest, always. I'll do this tomorrow. I'll do this all tomorrow for you. Tomorrow I'm going to build everything up on a couple of charts for you, so you can see exactly how I do it. But I do start with the weekly, then I go to the daily, then I go to the 4 hour, and I look to see if the 1 minute, 5 minute, 15 minute, if the price action is near some of these areas that I've marked. And if it is, then I'm paying very close attention to those charts, just like the euro on Friday, where it was in a key area. Raymond says, why did the high trigger line use to short instead of the low? They're both relevant. They're both. If you look at this one here, okay, this is from the bar in the background, the original trigger. Always remember this. When you project out any trigger lines, and the software does it, as I said, automatically, we're only interested when price action reaches that particular line. It becomes relevant. That's it. So when price action gets to the trigger number that you've got, that's when it becomes relevant to you. If it's nowhere near it, then don't worry about it. Just ignore it for the moment. It's not there yet. It's when it gets there, if it gets there, it becomes a relevant line. And again, going back to yesterday, I mean, this is what we're measuring. Force. That's it. VSA is measuring the force that pulls the market. Just to remind you, Wyckoff said successful tape reading is a study of force. It requires ability to judge which side has the greatest pulling power, and one must have the courage to go with that side. Okay, but just remember, you've got to be aware of the news, right? The most important price bar, okay, is the ultra high volume narrow spread bar, especially if there's a news-driven event around it. And I'll give you just two little examples here before we take a break, which I like. So that the Reuters news agency reports Wall Street resumes 2016 slide as energy stocks tumble. Okay, and that's exactly what causes fear in the herd. Now, this is an energy stock, SWN, on the monthly chart. One I made a lot of money on, actually. Look at the volume on that. Look at the volume. The market's tumbling, right? For a whole month it tumbles. This is a monthly chart. The next bar goes up. And then we start to improve. We get a test. Okay, and that is a classic example of how the news infers that these stocks are particularly weak. It's the trade guide of 4.7 now, Gary, and it's automatically set. I'll show you how to do it on tomorrow. I'll show you exactly how it's done tomorrow, where you preset it and it projects the lines out for you for these high volume bars, and it goes back 500 bars. Or I've got it set for 100 bars. You don't need it more than that, but it can go back further. And there's another example, beautiful example, bag holding. Look at that. That's bag holding for you. Big downtrend in place. Weekly chart. So the monthly, we had a climactic bar. And then down we come, all the way down, all the way down. Look at the volume. News is bad. And then they test it over here and up it went for several weeks. Bag holding. Very important signal. Right, we'll go to that later. I'm going to do that one tomorrow. Let's just see if there's any questions, and I'll take a break up until, let's take a break until 3 p.m., so 20 minutes, and let's just take any questions for the next few minutes, make sure. Was that all clear? Were you happy enough with that? Did you understand what I was showing you there? That's important. I know this is a trade guide at end of day software chart day. It's the end of day software that I'm showing here. Any questions, and we'll take a quick break, and then we'll come back for part two at... actually, let's make it 5 to. We'll have a 15-minute break, actually. Okay, Crystal, good. Any question? Anyone not sure of anything? Because I'm not getting many questions, and if that means I must have been clear. That's good. that's a good sign. Right, SC says, if we see a gotcha bar, we might be too late to catch it. Often, if you've missed the gotcha, you'll see the market go back up to the top of the gotcha bar SC on no demand, and you can short that as well. So you don't have to miss it. Very often, a gotcha bar will do this. There's your gotcha bar. Okay, now the next bar here may start to go up, come down, and then it may just go up a couple of bars, but the volume may decrease as it goes up. And if it gets up here and there's no demand, and the next bar closes lower, you're going to get a bigger move down. So you can still trade that. Doesn't happen all the time. If you've missed the gotcha bar, that means the market's weak. The gotcha bar is weak. So you will have shorting opportunities in the future. You won't have to have missed it. Frank, absolutely. I agree with you. Understanding what you say, but need time to study and practice. And look, I totally appreciate that. Yes, SC, you can. You can absolutely trade. Very often when I see an area of support in the background and I've got no demand above me, and I keep seeing weak bars like up thrusts, I'll put a sell order right below the previous area. Now, it's even better now because with the trend clusters, if they all start to appear above market action and you're seeing no demand bars, then you can put an order, say 7 ticks below price action, and then the gotcha bar happens and you're filled. That happened to me on Friday in the euro. It was one of the trades I took when it broke a key support level. And if you look at the YouTube video, you'll see where all the clusters were. Go and have a look at the YouTube video. By all means, at the break here, if you want to have a quick look, so you can see it. I know some of you didn't see it, but let me just come here. And if you go to www.youtube.com/tradeguider, there's a lot of good videos here that will help you, by the way. But the ones you probably want to look at are the ones I did last week. Just click on videos. Let's get rid of that. With my stop. That's very much. All right, that is the actual video that I put up on Saturday. If you want to go and have a look, there were the clusters right above us. There were the trigger numbers. So if you want to have a quick, if you're really don't want to go and have a cup of tea and you want to have a quick look at it, then that is the video. For those of you that weren't aware of it, it's only, I think it's 6 minutes, 7 minutes. I don't know how long is it. So look, 11 minutes long. There you go. That will show you exactly what I've just described to you with the setups and everything is in that video with me actually trading it. I was trading with a group of traders that I'm working with, and this you'll see everything there. So I'll leave that up for you. That's the video there, and I've put the link in the room. But for those that are watching this as a video, just go to tradeguider.com/YouTube, and you will find, www.youtube.com/tradeguider, and then you'll see that video. All right, it's 2:42. Let's come back at 3 p.m. then. Let's have a 16, 17 minute break. I'll put the recording on hold, and I shall be back with you. Let's just stop recording. All right, hi everybody. Welcome back to part 2 of day 2, and we're now going to talk about a very, very important part of trading, which is a trading plan. Now, many of you out there, well, let's ask the question first of all of the people in the room here. How many of you here, yes or no, have got a written trading plan, or actually written down trading plan? Just be honest. Doesn't matter if you haven't. Well, that is interesting. Of the people that have answered so far, 50% said yes, pretty much, and 50% have said no, and a few have said, I'm just starting trading. So this next section is going to be incredibly important to you, because one of the things that I learned right at the beginning when I started trading without any sort of plan was the truth. It's fail to plan, plan to fail was the lesson I learned the hard way. Now, when I was being taught by Tom, and I told him I'm going to write a written trading plan, Tom never ever had his own written one because he had it in his mind. He said, I've got my plan. I know exactly what it is, Gav. I said, that's fine. You're an exceptional person in that respect. I said, but there's a lot of people out there who really need to sit down and focus in. And when you write something down on paper, it does tend to focus you in on certain elements of what you're trying to achieve. So I've made some additions to this plan from the previous one that some of you have seen, not major additions, just some things that I've learned. And this trading plan has actually almost become a sort of life plan, really, in some ways, if you want to call it that, because it's focused me in areas that I knew I was going to go to anyway. But once you put something in writing, then suddenly it starts to, when things start to happen and it starts to materialize, things start to happen to you that are very positive and you've wanted to achieve something. It's quite incredible how it makes you feel about the future and also about your current state of mind, because 18 years ago, when I started this journey, I never ever thought I'd be where I am today. I mean, far from it. And when I look back at when I first started to write my book, the first book, Trading in the Shadow, and started to look at the charts, and they're a language, as Tom always said, I realized how important, from meeting traders that weren't making money or were struggling, and I've met many who struggled, the first question I asked them is, can I see your trading plan? Can I see what you've written down as your strategy? And they said, well, I haven't got one. I said, well, there's half your problem. So let me read this to you. I will go through it step by step, and we'll talk about each individual part, and we'll talk about time frames, which is very important. And you're all going to get a copy of this, okay? So don't take notes. You don't need to. You're going to actually get an actual copy of this. So this is Gavin's VSA Trading Plan, extended edition, with Tom Williams. When he was alive, he added some additional comments at the end, which I still read all the time because it gives me some inspiration. But first of all, I start off with a purpose, right? What is my purpose? And that's very important to me. What am I trying to achieve with my life? And it says my purpose is to empower my fellow traders and investors with the knowledge, the belief, and the confidence instilled in me by the master, Tom Williams. I want all who connect with me personally to be consistently profitable in the markets, be happy, and to help others know the truth about the markets, the herd, and the smart money. And that really is the essence of why I wrote the book. It is to give that knowledge, and a book is a very good way of starting out anyway in giving others what you have learned. Then there's a few things here I've added, and I'll share these with you. You get paid to wait, be patient. Very, very good statement. You get paid to wait in the markets. Be patient. Believe, and you will receive. And that is a very, very powerful statement, but it's true. We don't receive wisdom. We must discover it for ourselves after a journey that no one else can take for us or spare us. And that comes from the book The Secret by Rhonda Byrne. I'm able to succeed in anything I decide to do. This is the truth, but I must believe it. And that is true too. Now, one of the things I have personally studied is sports or behavioural science in sport. And if you look at some of the greatest golfers or sports people in the world, if you look at, I mean, even now my football team, Southampton, have their own sports psychologists there to get the players to understand the word belief. They believe they're going to win. And on Saturday, while I was doing our event together, my team won away from home, 2-0. And I listened to the interview afterwards with the manager, Mark Hughes. He said, well, when we arrived, do you know what he said? We all believed we could do this. Amazing, isn't it? We all had the belief. So for the whole week, we've been working on the belief that we'd get the result. And they did get the result. So one of the other things I find very important for myself is to make some sort of mission statement. And I've written this down. Some people don't need to do this, but I personally found this quite helpful. So I'm very grateful for everything I have today and gratefully expect more to come. I will share the information imparted to me by Tom Williams with my fellow brothers and sisters, and I mean that universally, who seek me or connect with me. I will make money in the markets and assist others to do the same. Notice the statement, I will. It's not I might do, I might try to, I hope I'll get lucky tomorrow. So you make a firm statement of belief. I will excel at trading and become a hedge fund manager in 2 years. I wrote this several years ago, actually, and I updated it 2 years ago, and lo and behold, everything's starting to happen. So be careful what you write down. I will act with integrity, honesty, and fairness in all my dealings with others. I will achieve my monthly and yearly financial goals and will always control my own destiny. Now, let me ask you all a question. How many of you here, I just say yes or no, have a monthly and yearly financial objective? Just ask the question of the audience here. How many of you here Interesting. Many of you in this room said yes, some sort of financial objective. Now, life is a journey, okay? It's a journey. And when you're on that journey, it's very important that you have some sort of idea every month, every year, where you want to be in that journey. Now, I have to say, there are many times that destiny does take over, as it did when I met Tom Williams, and your journey will change, but for a reason possibly that you don't know. I can say from my personal experience, with all the people that I've met, and we're talking thousands of traders and investors all around the world, it all started with a meeting at my office with Tom Williams, where I didn't realise the significance of that 2 or 3 hour meeting was life-changing. Now I look back on it, completely life-changing, and a much better life, I believe, than I would have had, because I've travelled the world, met lots of people. So it's important that you have some sort of goal. Now, I've seen a couple of people typing in, journaling. This is not a journal. Let me be clear. I don't journal. I don't sit and write down everything. Okay. I do make a note of my trades. I do wake up each morning with a set goal for the day and for what I'm trying to achieve. This morning was very clear. I want to really give great value in the webinar and the people that are coming to listen, and make sure that you take away something that can help you. That's it. That's my objective for the day. And after that, I'm going to have a really nice barbecue with the kids. Fine. But I do start the day thinking about all the good things that have been achieved, not just by our company, but also by the people that I've met. There's a lot of people out there that I've spoken to who are trading full time for a living using the VSA method. And this method isn't going to go away at all. The VSA method is very powerful. So the next part of the mission statement says, I will travel the world and teach what I know to others so they too will become or may become financially independent, which is, of course, exactly what I do. I'm going to Gibraltar to do that in a few weeks. I will connect with other like-minded people who have the same desires and aspirations that I have. I've met thousands of people, seriously. There's a lot more nicer people out there than there are nasty ones, trust me. I know if you watch CNN or you watch CNBC or BBC, all you hear is about politics and rubbish and nonsense and everyone stabbing each other in the back, right? Truthfully, the actual truth of the matter is that if you want to go out and search for nice people, you will find them. They're all over the planet. But unfortunately, the news and the media, as Tom always said to me, there's no news in good news. And we would sit there and watch the TV sometimes when they're reporting about some crisis or whatever, and the reporter would look out at us from Tom's big television and say, the news is bad and it's getting worse. That was supposed to make you feel cheerful. So don't ignore the news, seriously. There's lots of stuff goes on in the world, but there's a lot more good than bad. I certainly believe that anyway. So my mission, okay, something I had to write down and I had to think about it. To live a purposeful, meaning and enjoyable life and enjoy all I have and graciously seek more of what I want. To love my friends and family, be a good husband, father, brother, son, boss, friend and teacher. To understand that the universe that we live in is abundant and to know that every single person on this earth is important and should be treated as such. To understand and master the universal laws and always connect with the higher power and know that I can empower myself and others to have a great life. And then I've put always remember, this comes down to the trading now. We get into the trading side. Bulls make money. Bears make money. Pigs get slaughtered. Money never sleeps. Can anyone tell me where that statement came from? Those 4 lines. Can anyone have a guess? Where did those 4 lines come from? Actually, it wasn't. It wasn't Warren Buffett. No, Gary. It was Gordon Gekko in the wonderful film Wall Street. And I've got this little. I'm not going to tell the story. I told it yesterday. But Alibaba and the 40 Thieves. This is the biggest lesson. Don't be greedy. There's plenty of money to be made every single day if you're not too greedy. The people that struggle are the people that are too greedy and jump in too quickly. So remember, and this is what Tom said, the market is devious. And many times you will buy on good news only to lose money. and then sell on bad news, like with BP, only to see the price rise soon afterwards. That is because smart money understand crowd behaviour and take full advantage of the herd. Beware of the news. So then something very important is to look at yourself in the mirror and say, right, what am I good at and what am I not good at? And the fact of the matter is, when I've done this, I've improved in a lot of areas, but still I do have weaknesses. I'm certainly not perfect, and I still sometimes have days where things don't go right. That happens to everyone. But what I have learned, okay, what doesn't kill you makes you stronger. Great saying, that one. Okay, if it doesn't kill you, it makes you stronger. And that means that from every problem I've had or have encountered, and we still have them, you know, even in this business, I see it as an opportunity to improve, not to get down about it. So my strengths that I believe I have is I've got the knowledge, thanks to Tom, and I've now got, I didn't have it at the beginning, but the skill and the patience to succeed in this business. I am able to read the charts and to follow the smart money. If I was to lose my account, it would not affect my lifestyle or cause me financial hardship. I have the support of my wife in trading. That sounds, I'll tell you what, I've met a lot of guys whose wives are really upset because, and I've met a lot of women as well who've traded and said my other half doesn't get it. You've got to have that. If you're married or you've got a spouse, you really want them to be supportive of your chosen goal, your destiny, if you want to be a trader or an investor, because it's often perceived by the uninformed as a gambling type of situation, but it's not. You're not gambling at all. You're speculating in the market, and that's been going on for hundreds, if not thousands of years in different ways. So that's quite important, because my wife Laura is part of the team, so I don't have any problem there. I've created multiple income streams through business and investments, so I'm not reliant on one thing. I believe in myself, and I'm very grateful for what I've been given. So belief is a very key part. In fact, it's vital. So if you believe in yourself, to start with, you're halfway there, actually. The knowledge has come because they say, the Chinese proverb is, when the student is ready, the teacher shall appear. So you're here for a reason, because you're ready for the information. And this, by the end of this course, you'll have knowledge that very few people in the world have. And you might even be at a party one day and you'll talk about the markets being manipulated and people laugh at you. They go, oh yeah, funny. But the truth is, you'll know it's real because you'll have proven it to yourself. And then you will be a contrarian, which will make you money. Weaknesses. Well, I am impatient. I have to admit, sometimes I forget myself and I lose focus and I get a bit aggressive. Still happens. Sometimes I multitask and I'm not very good at it. So now with the new software, I get lots of alerts, but I'm much more zeroed in on specific trades, as I'm going to talk about tomorrow. I can overtrade. What do I mean by that? It means that I'm literally looking at so many good things at one time that I start to take too many trades. I always never risk more than 6% of the account in multiple trades, ever. I've never broken that rule. But sometimes I am in 3 or 4 positions at the same time because they're all lining up at the same time. You'll often find this, that when the Aussie dollar goes down, the pound will go down, the euro will go down, you're going, wow, and the yen will go up. Wow, they're all good trades. But the danger there is you can overtrade, and that means that you can make a mistake. So I try to avoid that now, and I literally focus in on really high probability quality setups. Opportunities, looking for the future again. I'm financially stable, and each year I've gone from strength to strength, so that's good. Through the knowledge imparted to me by Tom, I've created many opportunities, I've connected with truly some wonderful people, and I know the universe is abundant and that I can have everything I desire if I believe it and take massive action. Now that's the key to it. You can think and think and think, but if you take action on your thoughts, as I did with Trade Guide when I first started, as I've done with like with Gibraltar, the stock exchange, you've got to take the action. You've got to be there. You've got to do it. Okay, money and happiness are not linked. They're seriously not. I've met lots of people with lots of money who are the most unhappy people in the world. So don't link the two. Money does not create happiness. What creates happiness and stability is having the belief and the gratitude for what you do have, even if you don't have everything. you know, there's a lot of people out there, and you go and you look at the, we have something in this country called austerity. I don't know if you've heard of this, where, you know, the people who are on the social, you know, they're reliant on the dole or whatever you want to call it. They've been taking away their money from them. But I saw an interview with a guy that was living on the streets, and he seemed to me the most happiest person in the world. And he said, you know why I'm happy? I've got no responsibility. I was like, hey, good luck to you. So threats. I don't foresee any threats, but I am aware that the world is a changing place. We're in a changing world. And where is the change coming from? The monetary system. The global monetary system is changing. And you better believe it. And you better educate yourself, because the ones that are going to make the biggest money are the ones that know what's coming. I know that the cryptocurrency world has been getting a lot of bad press over the last 2 years because the big players, the manipulators, don't want it, because they can't control it. But now they've accepted it's here, and it's here to stay. So you should definitely find out more, and I'm going to send you that document. Set yourself some goals, okay? What you want to try to achieve, because without a goal, you're drifting aimlessly. Where with a goal, things start to happen, right? Some of them, you know, they've been planned to happen. Other things just literally land on your lap, and you don't know how you don't know why they have arrived, but I can assure you they've arrived for a reason. And opportunities, like I've been seeing from my point of view, are coming from all over the place. I don't know how many opportunities has hit me in the last 6 months, but it must be getting on for 100 different opportunities. But they have to have been created somehow. So I've said, from a personal point of view, to live a purpose-driven life and meet other great people who have the same desires and aspirations that I do. To have a great relationship with my wife, Laura, and all my children, family, and all my friends. To empower all who connect with me so that they may truly understand how precious life is and to enjoy every moment. That's very important to me. 16 years ago, I nearly lost my life. I was very close. So I take every day very, very seriously, as you can probably tell. I thoroughly enjoy it. I was very fortunate to still be here. But the truth of the matter is, once I, got back into where I was living and started to realise what I'd missed and how lucky I was, then the truth began to appear in front of me about why we're here, what we're doing here. And I chose the trading world because I love it. As you can probably tell, I'm absolutely passionate about trading because it is a way of being financially independent. It can be done. And thanks to Tom, he gave me the confidence and the knowledge. And without his confidence and knowledge, I probably wouldn't be doing it. So from a trading perspective, to become one of the best traders and fund managers in the world, that sounds like a big aspiration. Okay, but never ever believe that anything's too big. Okay, one day I'll be looking back on that, and hopefully I'll be sitting there saying, "See, I did it." But in the meantime, I'm enjoying the effort and the journey to get there. To build an automated VSA trading system that does not rely on human decision making. I wrote that 5 years ago, I think. I think we already have it. Very close. To open trade and manage an institutional hedge fund, done. To improve upon the current version of Trade Guide and build an institutional trading platform. I called it Trade Guide Professional. It's called Smart Center Pro, done. To clearly identify VSA principles when markets are being manipulated and post YouTube videos in advance of the move to warn the uninformed traders and investors. Channel now has over 7,500, I believe nearly 7,500 subscribers, so that's done. And to improve my returns on the accounts each year, and shortly we'll be able to publish those. So when I'm actually registered, we can show people. And then Smart Center Pro, thanks to Gregory. This is the strategy. This is very, very important now. We're getting into the trading side here. Wait for trend alignment in at least 4 time frames, paying the most attention to the large time frame that you are monitoring. Swim with the current. Do not fight the trend of price. A trend goes on a lot longer than one thinks, so trade with the trend. The trend is your friend. Always monitor more than one time frame. Let me go back here, if I may, to this statement. A trend goes on a lot longer than one thinks. Let me put up the weekly NASDAQ. This is the NASDAQ weekly, the weekly chart. What trend are we in, do you think, in the NASDAQ? What trend are we in the NASDAQ? Just type in. What trend are we in right now? Yep. Yep. And every time the market comes down, buyers appear. Okay, this is in an uptrend, and it has been since 2013. Really, if we go back, you can see where it starts to break out. You can see where the buyers are, but look at this. Look at the buying, climactic buying here. Demand overcoming supply. This is a weekly chart, and those signals were there when they appeared. But guess what? Now, when you look at the support and resistance lines, and you start coming down on the different time frames, if you go to the 4-hour chart and you go to the 60-minute chart, and then you go down to the 15-minute chart, you can see that we are in an area where we're getting a lot of support below us, as you can see, even in the small time frames. And so, last Friday and Thursday, when the market was rallying, these clusters were below on every single time frame because the market was bullish. The market is bullish. Okay, so we do not fight the trend. If the market's going up, we want to look for testing and no supply. Bill says the trend is your friend until the bend at the end. Well, we know how to find that bend, don't we? Because we know if it's going to end, we're going to see either an upthrust, an end of a rising market at the top, and we haven't seen that on the weekly or the daily yet. So always monitor more than one time frame. The market's a fractal. Look for trend alignment in multiple time frames. Remember that strength appears on down bars. A down bar is defined in VSA as a price bar that has closed lower than the close of the previous bar. And weakness appears on up bars. Again, an up bar is defined as a VSA price bar that has closed higher than the close of the previous bar. This is Tom's favourite saying. Wait for your bus to arrive, Gavin. So what does it mean? So if you're waiting for a number 10 and a number 6 arrives, do not get on the bus. And trading and investing, you're paid to be patient. That means recognise and learn the VSA setups, which are the highest probability, and look and wait for them. Then you'll get trades. Every day you'll get trades, almost guaranteed. You just got to be patient and know how to find them. The most important price bars to identify are price bars with massive volume and narrow spreads. I repeat, the most important price bars to identify are price bars with massive volume and narrow spreads. Note the spread of a bar is the high and low of the bar and should not be confused with the bid-ask spread. If the bar closes in the middle, this is incredibly significant. On an up bar, as defined previously, the next bar should close lower. This is selling. On a down bar, we defined previously, the next bar should close higher. This is buying. When trading currencies, monitor both the spot FX and currency futures together, which I'll show you tomorrow. The spot FX will move a few seconds before the futures and gives you valuable time to get into a trade. This is going to be covered tomorrow, so don't worry about that now. Pay particular attention to signs of weakness. Number 58, the trap up move. It's a trap laid by the professionals or smart money. Wait for the market to break the low of the trap up move price bar and mark this level on your charts. Then look for no demand at this level or up thrusts, which confirms the weakness. This is just a trading rule. You'll find with trap up moves, very, very often, the market will move up after the trap up move. So it goes back up to the top and then comes back down. So you've got to be patient for it. But a trap up move is what we saw in gold. Let me just remind you. We put gold up. This is the reason I went on to YouTube. Here it is. Okay, that's a weekly chart. Okay, and that is in control at the moment. And we're back down to the low of that bar. And if we start to break down further next week and go back down through 1200, then there's a long way to go. There's a lot of room to come down to 1040. So the trap up move, they brought it down for about 5 weeks. Then it went back up into that area, broke it once, broke it twice, broke it 3 or 4 times. But all of these bars are weak bars. Closed in the middle. Ultra high volume, closed near the middle. Closed near the middle. Look at the volume. Closed in the middle, next bar down. This is weakness because of what's in the background. And that's very, very, very important. So, look for trigger numbers. They are areas where the big money is positioned. When smart technology, I'll say, because when I wrote this, it was Smart Center Pro, identifies the following trade setups, especially in big time frames. Be prepared for a trading or investment opportunity. And I'm talking in big time frames here, 60-minute and above. The end of a rising market, the trap up move, the reversal over 2 bars. Bag holding, climactic action, stopping volume, testing a rising market. Okay, those are all indicators in the software. Now, I've been asked a few times, what markets do I trade? Don't know. You can trade whatever you like. I personally like these particular instruments. Now, the first thing I should explain to you is there are different instruments that you can actually trade. There is the CME futures, the Chicago Mercantile Exchange futures, which are by far probably the most popular. Well, no, actually, Forex is the second one. That's probably the most popular. Foreign exchange market, Forex. And then you've got, as I say, the futures, you've got stocks, you've got all the different metals and commodities. But most of these can be traded on the CME Group exchange. Now, I have a particular liking for trading these currency pairs. I'm not as keen anymore on this one, funny enough, the Canadian. It's been very difficult to read. I'm extremely keen on that one, the Euro USD. It's been making the bread and butter. So it's a very good instrument to trade. And all of these can be traded in Forex as well. Okay, so I'm showing you currencies, but I mean currencies and Forex as well. Okay, so the futures contracts, S&P, Dow, NASDAQ, Russell. By far, for me, the best one this year has been the NASDAQ, by far. Okay, it's got very, very good signals on it. It's a very good instrument to trade, and it moves very quickly when it moves. You all know, I'm pretty certain, because you followed my work, that I specialize in gold. That's my main market, really, from a trading perspective. But I do look at other things, and in the hedge fund, we're going to be looking and trading wheat, corn, and oil, because we're trading a lot of size, obviously. But these are the stocks. So people are asking me which stocks I like to follow. I've added Facebook to this, actually, which I'll add at the bottom, actually. We'll add it now, because I'm following Facebook quite closely now, so I'll add it in here. Okay, and the FANG stocks. I'll just put FANG stocks. And I'll tell you what FANG stocks are tomorrow. So Facebook, Apple. But I'll do it tomorrow, right? We'll just keep it simple for now. But Facebook is one you do want to be looking at the moment. You definitely want, if you're a stock trader, we'll do some stock analysis tomorrow. I'm going to show you how I identify which ones. And I'm an investor rather than a scalper in stocks. I don't scalp these. So the strategies and the core timeframes. On every chart, look initially for the Yao Ming bars on the highest time frames. Remember, Yao Ming bar is an ultra high volume bar. The higher the volume, the more potential for a large move. Remember that. The higher the volume, the more potential for a large move. Then I count from the minute I see the high volume bar, I begin to count out to 25 bars. Because usually within that 25 bar period, you're going to see a low volume bar. And that's going to confirm what's happened on the high volume bar. So if you're going to go short, because the ultra high volume was on the up bar, look for no demand bars and up thrusts, which are actually high volume bars, for confirmation. This is especially powerful if the no demand and up thrust are at the same price level as the ultra high volume bar, which will now act as serious resistance. Let me show you that. So imagine here we've got the volume at the bottom of the screen here. Okay, and we've come up here. The market's been going up like so, closed in the middle, closed up on the top, and then suddenly we get this massive volume spike, and the price goes up, and it closes in the middle. It's a buying climax. Now the top of the bar here, okay, that's serious resistance. But sometimes what's going to happen is this. It's going to go sideways like this. Now, in an ideal world, you're going to see this happening. If in an ideal world, but it doesn't always happen. There's a big bar like that, massive volume, almost equal to this bar, and it closes near the low. If you see that, with this in the background, you can get short almost immediately. Because that upthrust is a confirmation of this weakness. But if you want to be patient, you can wait for the market to break the low of that bar, and then go back up on very low volume called no demand. And that is an entry. So very, I mean, when you see that, if you see that set up, I'd say that's 95% probability of accuracy to go down. Okay, very high. They're rare, but they happen. So, if going short because the ultra high volume was on up bar, look for no demand, up thrust for confirmation. If going long, look for ultra high volume on a down bar, narrow spread is a very strong signal. Then look for stopping volume and no supply. Wait for a change in market behavior, which we call a trend change. Identify distribution at the top and look for the mushroom. Short as the mushroom declines at the far edge of the chart. Really easy to work that one out. So as the market goes up, it 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 then hits the high volume. Narrow spread. What happens is this. It goes sideways, it goes sideways, it goes sideways, and it comes down, it comes down, it comes down, it starts to fall. That's where you should be trading in there. That's where you should be short. As you've seen the change in behavior over the top, as it begins to break, the lower this bar, look for no demand. Very, very high probability trade setup. Okay, we always want to go short, okay, on signs of weakness. Of course we do. But remember at the bottom edge, right, when the market's accumulated, it comes down, 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 and then bang, you get your higher volume. Could be a bag holding. Okay, it goes sideways, it goes sideways, it goes sideways, then it starts to go up and it goes up and it forms like a saucer. You could put a little handle on it. You want to be getting long there as we break about the top. Any questions so far before I move to the multiple time frames? Any questions so far? Or is that clear? Have I been very clear? Just want to double check. I want to make sure you're getting this. Yeah, good. Tomorrow, I'm going to focus in on actual trade setups, specific numbers. Okay, so I'm not going to do that today. Okay, there is trade setups in this trading plan, but Frank, tomorrow I will give you actual specific setups for you to go and look for. Okay, and they're actually pre-programmed into the Trade Guider software. So you can actually, I've got them pre-programmed in, so you don't have to go and even look for them. The software will, if you've got the software, it will find it for you. So the time frames. Now this has always been a big bone of contention with people. Which is the best time frame, Gavin? Right? Which is the best? There isn't such thing as a best. What there is multiple time frames showing an entry or an exit, but then it's dependent very much on whether you are a scalper, a swing trader, an investment trader, because you'll be using different time frames. So I'm only going to share with you the ones that Tom and I used to use together and what we considered were best for us. Yeah, John, absolutely. So the question there has come in. Will I go over how to react if you're a long trade or short trade and you start seeing signs of weakness? So let's say you're long and you see a sign of weakness appear. Okay, what do? You've gone long, a sign of weakness appears. It's a really simple thing. All right, if I see a sign of weakness and I'm long, I wait for the next 5 price bars to tell me what the market wants to do. If I see a test after a sign of weakness in an uptrend, I stay long, especially if the test is successful. And if it's a successful test, I just move my stop. But I don't have, and will never have, a set exit. I chase the market up as I go. I use something called chandelier stops, which we have built into the program, where you basically get, the golden rule is this. I don't want to lose any money in the market, so I get the stop to break even as quickly as I can. That's the first and most important thing, right? I don't want to be at risk in the market. Okay, that's the most important part. Secondly, have I made a good trade and the market, go and look at that euro trade. It's exactly what happened. I had a very low risk to start with. Okay, I got the stop to break even quickly as the market, the gotcha bar came in. And then as it continued to fall, I just was locking in 7 ticks every 10 minutes. It's very straightforward. If you see a sign of weakness, my key to it is if I'm long and I see an enormous volume up thrust and the next bar's down, I'm probably going to close the trade because I can see there's a serious sign of weakness. But very often you'll get supply coming in and then the market tests that supply 3 bars later and it keeps going up. So you've got to be broad-minded on that. Okay, you have to do it's an individual. It's called, as Tom always told me, that's your skill as a trader, and everyone's different. I developed mine over many years, so I now can pretty much read each bar and know what the market's telling me. As I'll show you tomorrow, and we'll look at forex tomorrow. So here's what I trade from a futures perspective. Now this is for scalping the market. Just want to be clear, or going in for during day trading. Now I do use weekly and daily charts. Let me be clear. But from an actual trading point of view, that is the favorite time frame that Tom and I used to use. It's the 4-hour chart. 4-hour chart. And it's one you should absolutely have in your arsenal, because the 4-hour chart, as I'll show you, gives some very good trend cluster information from the point of view of support and resistance. In fact, I'd say it's the best one by far. The 60-minute chart is absolutely beautiful from the point of view of VSA indicators to turn a market. So if you see on the 60 the end of a rising market or bag holding, that's going to turn the market almost 90% of the time. And then, as you've often seen me using, the 15 and the 5-minute chart. Now with Super Scalper, we can use the 1 minute, 2 minute, 3 minute and 4 minute, as well as the 5 minute, and that is part of Super Scalper strategy. The highest time frame, so I've been looking at the E-minis, okay, because that's the future, the currencies, that's the forex. Then I obviously look at daily and weekly. The daily is incredibly important. That's probably the most important one, because you're looking for the trend clusters on the daily to see where they are. And then you've got all these other time frames. Now, again, for trading intraday, I use the 5 and the 3 minute, okay, especially after news, especially after the news. And then for the gold, for the silver, for the commodities, for longer term views of wheat, etc., I always look at the monthly on the commodities. Monthly, weekly, daily, 4-hour charts. And it's very similar for the stocks as well. The most important one for investing in stocks is going to be the weekly chart. And I'll explain why tomorrow. The weekly chart will give you a very good picture of which stocks are being accumulated or distributed. Now, we've added this in because we've now got trend clusters. Trend clusters, as we'll talk about in a minute, very important part of 4.7, the new version of Trade Guider. So identify key support and resistance areas using the clusters. Start with the weekly and see if any clusters have appeared below or above the price level. So if we go to the euro, go to the weekly, and then see if there's any clusters on there. Nothing on the weekly. Go to the daily. Nothing on there at the moment. But the 4-hour, massive clustering above us. Massive. Okay, so the 4-hour chart has shown us where the weakness is. Here, here, and we've got 2 massive clusters right above us. That's serious resistance. And that will act as serious resistance for next week. So that's how that works. Identify the trend direction on the 3 largest time frames, weekly, daily, and 240-minute chart. It's very easy to do. You come up here, you switch on your smart technology. Okay, you look here at the right edge, at the left edge, you look at the weekly, and in this case, I'm using an 8-hour and a 4-hour chart. But on the other time, on my other Smart Center Pro, I've got those time frames, the daily as well. But what you can see here is certain instruments like the E-mini are starting to look bullish. Notice the daily chart has been going up. The weekly chart has been going up. All the other time frames are going up. We just want the 4-hour, which it will do, to turn green. Then you have total trend alignment to the upside. What does that look like? On a chart, it looks bullish. It looks like that. And a few weeks ago here, this was the 2-minute chart actually of the chart on Friday. We had testing. The 4-hour chart is absolutely beautiful. You can see down here, before the big move, they tested it up and they're back down into that area. They're holding this area at the moment. I would expect a really good move up into this area next week. So, identify trend direction. Now, top bot, to locate trades at key support and resistance levels. Follow the rules and wait for a clear change in behaviour after a top bot principle has appeared. To short, we must see the bottom of the climactic bar broken and make 2 lower lows on the bars. To go long, we must see the top of climactic action bar broken and make 2 higher highs. Ladies and gentlemen, these rules are now programmed into the new version of Trade Guiders. They're already in there. You can set it. So those rules, you don't have to do any analysis. It will send you an alert when those rules are triggered, which I'll show you on Thursday. So, let's now talk about, finally, Top Bot before we, for the next 15 minutes. I'm going to try and keep it on time today because it's a Sunday, but we'll see. I'm going to give you the document. You probably have already got it. Some of you already have. Frank, just to be clear, on news-driven events, the best time to trade them is the next day. The next day. So if I see, well, I'll tell you one of my best trading days. Wednesdays, when they release the FOMC meeting minutes, and they do that 7:30 p.m. my time, I don't touch the market. But I wake up around 6 a.m. the following morning, and I'm at my trading desk very early, and I'm waiting. And all day, I'll be looking for trades. You see if I'm wrong. Works every time. Because what they'll do on FOMC, they mark the market in the complete opposite direction they want it to go in. They trap everybody, and then the next day they go in the direction they want it to go in, and you get a very nice trend trading day. All right, so let's just introduce you now, for those of you that don't know. This is one of the Smart Center Pro trading strategies called Top Bot, which I developed, but I didn't invent it, okay? And Grigory programmed it, and I'll just read to you, we won't bother with disclaimer or anything, but I'll just read to you the background, first of all, and then you'll all get a copy of this document, because this will explain to you the logic. When I first met Tom Williams in the year 2000, it was just before that, and began to take an interest in the financial markets, Tom made a statement I'll never forget. He said, Gav, the fact you know absolutely nothing about trading and investing and have no preconceived ideas will make you an excellent student for me to teach, and one day you'll be a great success in this business. Looking back, it's been a great journey, and it continues to be so. But before Tom passed away in 2016, he had a wish. The biggest danger to a human being trading and investing in the markets is actually themselves. We need to create an automated trading system that takes much of the analysis away from the human being and let the computer do the work. A computer does not have flaws in its logic. Tom was describing to me what was in his mind. An automated volume spread analysis trading system that found trade setups based on the key principles of Wyckoff and computerized by Tom. And there's further information in this document, which you'll get. This trading system would intuitively trade alongside and in harmony with the smart money players who move and manipulated all markets. It was during 2016 that our head of technology, Grigory Margolin, showed me the latest development of a product to be used in our fund called Smart Center Pro. The concept was simple. Find trade setups based on Wyckoff volume spread analysis that are in harmony with the trend of multiple timeframes using the proprietary tools in the Trade Guider software toolset. At the launch of Smart Center Pro, live at the CME Group headquarters, which is the Chicago Mercantile Exchange, in downtown Chicago in October 2016, we were able to demonstrate live trading using the system, using timeframes, starting with weekly, daily, 4-hour, hourly, 15, 5 and 1 minute charts. This was by far the most successful launch of any Trade Guider software product in the 18 years since we started business. I shall take that back now because the new version of the software has been much more successful. Thank you. The new Top Bot strategy for Smart Center Pro was developed based on a conversation, this is important, I had with one of our long-standing and very valued customers, Mr. Nick Cowan, Managing Director of the Gibraltar Stock Exchange. As I write this, Gibraltar Stock Exchange has launched the Crypto Harbor, which is already a world-leading token sale platform and cryptocurrency exchange. During a conversation with Nick about Wyckoff VSA analysis for cryptocurrencies, I had an aha moment. You can find a lot more, by the way, about Nick and what he does and his history by clicking on that link. But Nick was one of the first users of the Smart Center Pro trading platform and discovered the most important VSA signals include the end of a rising market, which is a sign of weakness, and bag holding, which is a sign of strength. Before Tom passed away in 2016, he gave me a list of all the counter-trend VSA principles and indicators that would mark a major trend change or turning point on multiple timeframes. And I'm going to give you those before we go. When these very important high probability indicators appear on the chart, They are the footprint left by the smart money as they begin to accumulate or distribute to the herd, and they all have massive or ultra-high volume associated with them, which we call climactic action, or as Wyckoff referred to them as hypodermic price bars. Unlike our super scalper, sharpshooter and prism strategies, which are all in-trend strategies, top bot is counter-trend. The only confirmation needed is on the close of the bar following the appearance of one of the indicators. Now, this is the bit that's important. We have now changed the new software to show you when the change of behavior has happened. Okay, so now we wait for the change in behavior to happen before the trade is actually taken. And I'll show you in a minute how that works. So you've got examples here in the software. The concept that I'm going to show you is all here. So it explains the concept of what this actually does. And it's very straightforward. We're going to find unusually high volume on a chart in the timeframes that are being monitored, which is what we call climactic action. We're going to show the change of trend as the market begins to roll over in the smaller time frame. So the rule is, the bigger the time frame that the signal is seen in, the bigger the move is likely to be. I'll repeat. The bigger the time frame that the indicator or signal, whatever you want to call it, is seen in top bot, the bigger the move is likely to be. We then allow a trader or investor to monitor and scan hundreds of charts at one time, as you'll see me doing on Thursday. And my business partner, Neil, came up with the word, so very nice chap, and he said, Kevin, so what you're actually doing is you're sniffing trades. And I wanted to call it the sniffer, but no one would let me call it that, but we called it Smart Center Pro, but that's exactly what it's doing. It's sniffing out trades. It's finding them for us. And then, how do we know when there's an alert? We get audible, visual, and email alerts, 3 different types. Okay, so you set the system to email you, as I've just shown you in my GMX account, to tell you what does an email alert actually look like. Okay, let's open one. Here's one here. Okay, this was for, this actually happened on Friday. It was a short, it was one of the trades I took actually on the euro. Okay, you can see there. It tells you what the instrument is. It tells you, obviously all the scanners are set for the 1 minute chart, but it tells you what time frame the alert came in. In this case, it was the 3 minute time frame, and it was a buying climax, okay, here, followed by a trap up move. So that's what we call a 2-bar alert. And if we go and have a look at the euro, you will see we have supply coming in, we have no demand, we have the upthrust, and you can see all along here there are these different indicators. There's the one that sent the alert, and then we had a trap up move, and then we had the upthrusts, which are just here. So that's the buying climax. The market's only a 1 minute chart. It knocked it down for 4 minutes before they marked it up again. But the real move in the euro was on the 5 minute time frame, when you can see very clearly there, at the end of the day, a gotcha bar right onto the cluster. So let's move on. These are what we call sequences, okay, VNSA sequences. And these are programmed in, okay, to the software, the new version. And what they do is you don't always see them, but we're looking for them within 25 price bars. Let me be clear. So 25 to 35 price bars is where we're looking for. And we look for these sequences to appear, and you'll see they all make sense. Okay, and those are the top 5. The strongest one is that one, setup 1. It's rare. It's very rare, but it happens. And when it happens, I'm going to show you how you'll get an email alert to say it's happened. Longs, that's the most, well, both of these are absolutely golden. Bag holding, followed by stopping volume and then a test. This is even better. Again, it's fairly rare. Let's move that down one. And then setup 3 is the reversal bars. Now, you're going to get a copy of this, so I'm not going to read it all to you because of time. Money management. I will not risk more than 2.5% of my capital in any one account in any one trade. I will not risk more than 6% of my capital in any one account in multiple trades. I will close a losing trade quickly and treat it as a cost of doing business in the market. I will never take a loss personally, and I don't. I will never get angry because a trade went against me. In fact, remember what I said, okay? If it doesn't kill you, it makes you stronger. Learn from it, but don't get angry. I will learn from the losing trade, but will not dwell on the losing trade. If I make 3 consecutive losing trades, I will cease trading for the session and re-examine my plan. That hasn't happened to me for a long time, so I'm fine with that. But I will never revenge trade. If you ever make through 2 or 3 losing trades, you say, I'm going to get it back, I'm going to get it back. And you start trading, you'll make another 6 losing trades, guaranteed. So don't do it. I will allow a winning position to run using the chandelier stops and H stops in Trade Guide, which I'm going to show you on Thursday. My key objective is to get my stop to break even, then small profit without getting stopped out. I will use a minimum of 2-to-1 risk-reward ratio. I will evaluate my trades every Saturday and will identify high probability trade setups for the following week. And there are several that I've identified, but I'm going to show you tomorrow as the markets open. Some final thoughts and some final comments. Most people get interested in stocks when everyone else is. The time to get interested is when no one else is. You can't buy what is popular and do well. Warren Buffett. In which it is shown that if you scrap traditional approaches to the market and attack the financial conspiracy with its own weapons, you can beat the stock exchange insiders at their own game. Richard Ney. The story is told that after he'd been deported to Italy, infamous New York City gangster Lucky Luciano granted an interview in which he described a visit to the floor of the New York Stock Exchange. When the operations of floor specialists had been explained to him, he said, terrible things happened. I realised I'd joined the wrong mob. True story. That was Lucky Luciano. 6th of May 2010, the Dow drops 1,000 points in minutes and all the stops are caught. But most stocks do the same thing, and it's all blamed on a fat finger futures trader and a guy in Hounslow here in England, trading the CM Easy Mini futures with 16 million contracts. Maria Bartiromo stated that she'd never she's never said this again, and it's never been said again as far as I can see on the mainstream media. This really sounds like market manipulation to me. She said, this is outrageous. Then in CNBC 2010, they finally came up in the mainstream media with the truth. Everyday investors wonder if market is rigged. I will not get sucked into buying market tops and selling market bottoms because I know the intrinsic relationship between the imbalances of supply and demand and the footprints left by the smart money. I know the game on Wall Street and will win it. Every time I trade or invest, fail to plan to fail, I will follow my plan and adapt the plan as necessary to current market conditions. A plan is work in progress, just like living life. So I will treat each new trading session as a new opportunity. Tom Williams, Simple Rules VSA Plan. This is Tom, not me. I will look for any VSA principle that shows me that a market is undergoing heavy accumulation or distribution by professional money. I will trade any market where a strong VSA principle has appeared. The strongest principles are to short, end of a rising market on ultra high volume, narrow spread into fresh high ground, we call it, which is where it's gapped up. If we see an upthrust or no demand into the same price area, this is a very good short. A buying climax on ultra high volume, especially if seen on a big time frame, like a daily chart. The example, gold futures in the 10th of August 2011, which Tom traded. The upthrust into prior resistance on ultra high volume followed by no demand. That's massive. That I'm going to show you in a minute in the new before I finish. I may overrun just a little bit, because I want to show you that I've added the upthrusts into the signs of weakness in TopBot, and you need to do the same if you've got the TopBot software. To go long, bag holding. If the news is very bad, I will buy instantly, no confirmation needed, and that's exactly what Tom did with BP. Selling climax followed by lower volume down bars, as I've shown you today, into the same area as the selling climax. Buy any bar when the volume is lower than the average volume, Stop is always below the selling climax bar. The bottom reversal, when both bars are on high or ultra high volume, followed by a test, by the first test after the reversal. Okay, let me just increase the size of that to 14. So it's all matching. That's it. So things to keep in mind. I immediately close a trade if it starts going against me, maybe because I got in too early. I always use a stop loss. I will stay in a trade until I see an opposing principle that will stop the trend trade I am in. Someone asked, where do I get out? That was Tom. That's his words. I don't ever get emotional about my trading. That's true. I know I'm not 100% right, but I'm very close. That's very true. I enjoy helping other traders and investors to learn the 30 years of knowledge that I have gained. All the principles that you can see on a chart in hindsight will be there in foresight. So believe in VSA as I do, and you will not go wrong. The late Tom Williams. Some very wise words there. Now, let me just show you, before I take final questions, the actual setups for the top bot strategy that I'll be using to trade on Thursday with you. And you may want to make a note of these indicators because I've changed a few of them from I'll give you the list anyway, but just so you can see them. So in the Smart Center technology, I'm using 1, 2, and 5, which are still, but I've added 2, which is the up thrust. So what you're going to notice from the top bot document, I've added in now, all I've added in is the up thrusts. Okay, everything's pretty much the same. I've just added in the up thrusts. I also added in supply swamping demand based on a conversation I had with my colleague in Gibraltar, and that's actually working really well. Number 54. All of the end of a rising markets there, but I've also added in the failed test. Okay, and that is incredibly powerful after you've seen one of these signs of weakness. Again, all the up thrusts have been added. All right, up thrust after supply. Weakness has appeared, has been added, and supply overcoming demand. So those are the additions to the top bot strategy that I put in. Now, there is some additions to the buying as well. And the additions are the tests. So 29 and 30, the test of breakout, which are not on ultra high volume, which makes it an addition to top bot, which is not on ultra high volume. It's the only two that are not. Is a test of a breakout and a test in a rising market. Okay, and then I basically have my trigger parameters set. And one of the things you'll notice in the new software now is if you come down here, you can change the different types of things that you want to look at. Okay, if you want to use sharpshooter, it's all in one place. Makes it much easier. And these are my alert parameters, but I'm going to talk all about these tomorrow. Okay, so don't worry about that now. Right, save and exit. And let's take questions. Let's have a quick look. Okay. John, yes. Yeah, absolutely. If you haven't got smart technology, then yes, you could do that. Absolutely. Just focus on 1 or 2 charts. That's fine. Yeah, the only reason we have this is we can look at multiple charts. You know, so I can basically, if I want to, look at, very quickly look at instruments here in Smart Center Pro. And if I look at, say, like you've got the 6B, the 6J, the YM, the Aussie, the gold, the NASDAQ. So I'm monitoring all those instruments. But yeah, if you haven't got that technology, yeah, you can absolutely have a look for yourself. Let's have a quick look at the questions then. But before I finish, just a few pointers for tomorrow. Same time, same place tomorrow. Happy Labor Day for those of you that celebrate it in the US. There will be no futures trading tomorrow, but there will be Forex markets open. Tomorrow's all about live charting. Okay, so there's no more PowerPoints. It's all about the live charting. We're going to go through all the different Forex pairs tomorrow. We're going to look at stocks tomorrow as well. So we're going to have a session on stocks because I know some of you have asked for that, and that's going to be tomorrow. And then Thursday, the final session, it's all live trading. Yes, to get the special pricing, you've got to email me, Steve. Don't go to the website because you'll pay the full price. It's gavinh@tradeguider.com. I mentioned this yesterday, but I don't think you were here. I'll show you here. It's gavinh@tradeguider.com. It's my personal email address. And just put in the what version of the software are you running? Can I just ask? Gavin H at tradeguider.com. You're running Infinity. Okay, that's absolutely fine. Yeah, no worries. Yes, yeah, it's absolutely, it's there now. So let me just put in my email for you. Gavin H at tradeguider.com. There it is. And for those of you that upgraded already, and I know many of you have, you'll be set up on Tuesday, just be clear, because tomorrow's Labour Day and AJ isn't working. And what we want to do, we'll send you all the instructions Tuesday morning. You'll get set up straight away. It's all self-explanatory, but then if you need any help, AJ will be there and will prioritise you because you're in this event. Good. Right, I don't think there's any questions. I think we're good. Let me say thank you very much indeed to all of you for being here today on a Sunday. I've tried to keep it to the right time. We overran a bit at the beginning, but I managed to keep it to the right timing, which is great. Again, if you do have any questions that you don't want to ask publicly, you can always email me. And on behalf of everybody here at Trade Guide and for myself, as always, I wish you good trading, constant profits. I hope today has helped you. I hope you've learned something. And God bless. Take care. Have a great week next week. See you tomorrow. Bye-bye.